All right, so going back to chapter 5.4, right? We looked at the first costing method for FIFO, which is again going to be looking at the costing methods, right? Why do we need to have a costing method? Well, in order for us to figure out what our sales price should be, right, we need to determine a costing method that works best for us. So for instance, right, we have three costing methods that we're going to be learning in this class just because the last method, right, doesn't necessarily have to apply to us in general in terms of is this a common costing method that we would normally use, okay? So for this, for these costing methods, right, we have first in, first out, FIFO for short, right, is usually typically used for when you have to sell things like groceries, right? Because groceries, right, they have one thing about them is that they do not have a long lasting shelf life, right? So things like, fresh produce or fresh meats, right? Usually you should be selling them in batches on the date that you purchase them because again, they don't have a long lasting shelf life. So for instance, right, let's say you have milk, right? Usually when they uh, put the milk, right, in the shelves, right, usually it's actually in the shelf in FIFO order, right? Because they all have some kind of expiration date, right? And then, as us people, right, we normally dig in the back just to get the most long lasting, freshest milk. But in this case, right, you would never ever end up selling your batches of milk that you had long left over and sell those ones last because they have an expiration date. You have to sell as you go, right? When you purchase it, that means you need to get rid of this batch because of the expiration date. So that's why typically most grocery stores should be using the FIFO method because they sell perishable goods that have an expiration date or a short shelf life. Okay. So that's what you should have learned yesterday is how to calculate FIFO. Now, the next one that we're going to be looking at today is going to be LIFO, which is last in are usually the first ones that you sell out first. So LIFO for short. So last batches of inventory are usually sold first. Now, this is very typical for most anything that has some kind of, you know, electronic kind of company, right? Because you're always going to have the latest and greatest being sold out, and those ones usually go first, right? So things like a typical cell phone store or anything like that sells some electronics. So think of Best Buy, right? They sell their products based on their models, right? Even though they still sell, things like the iPhone 10, right? Actually, the iPhone 10 doesn't exist anymore, but iPhone 11, iPhone 12, iPhone 13. But right now, because they released the iPhone 13, of course, came out this year, right? Everyone's going to want to buy the iPhone 13 opposed to the iPhone 11 or 12. Even though they still exist, right? They're still selling them. They usually typically sell out the latest models first because of the Lifo model. Okay? Usually the latest and greatest are always better, right? Because you don't want something that's too old or, right in between. So that's the idea of using LIFO method to calculate the cost of your inventory because usually you would sell your last batches first. Okay? And then weighted average, which we'll talk about tomorrow, right? That'll be the last costing method that we'll cover, is going to be weighted average. Also, usually we refer to this as average costing, is where we don't care which batch of inventory came first or we don't care which batch of inventory came last. All we care about is just gathering up a grand total quantity and spreading the cost evenly amongst every unit of item that you have. So for instance, something like water, right? Water bottles. Water bottles is a natural resource that every single store is going to sell. Since it's a constant thing that you're constantly buying, doesn't matter whether you bought these batches in the beginning of the month or bought these batches in the end of the month, right? You're going to treat them all the same. And usually they are being priced at the same price as well. Okay? So in this case, that is an example of how you would use average costing for this. Okay. All right. And then, of course, specific ID. Specific ID is going to be something that is more geared towards, the reason why you would use specific ID as a costing method is because, for instance, right, an auto repair shop, right, it's not going to always have inventory on hand because in this case, the inventory items are going to be specific to that particular item, right? It has to be requested. So for instances, right, an auto repair shop, right, they're not going to have a generic car part that's universal for every single car, right? Because we have to see what car is going to come into the shop. We have to look at the car brand, right? The car model, the exact year, the exact car part. So in this case, that's what specific ID is. And again, it's typically not going to be used as common or as often as in terms of a store. I'm so sorry. Can you excuse me for 1 second? Okay, sorry about that. Excuse me. So, yes, so those are the costing methods. Now, for the sake of this class, because it really depends on what kind of business we are, right? If we're not in some kind of business that needs to record a specific item based on a specific request, I unfortunately with this class, there's no need to really teach you specific ID, but just know that it is an existing costing method. Just in this class, I'm not going to teach it. I'm only going to teach you these three, which yesterday we covered FIFO. Today we're going to be covering Lifo. Okay. So last in, first out method. Okay. So here are the formulas that you will be needing for this costing method, right? You need to figure out what the purchase price is, right? Straightforward, which is your quantity times your unit cost, right? And to get your total cost, you're going to calculate your purchase price plus any expenses such as freight, right? And that's going to give you your total cost. Now, once you figure out your total cost, because we need to separate our inventory by our batches, we need to figure out how much each batch of inventory is going to cost me. So that's where we have to solve for our cost per item, okay? So once we have that cost per item, which is going to be our total cost divided by our quantity, okay? And that will give us our cost per item. And then for the goods available, which is your beginning plus your net purchases, we'll talk about this section. This is more for the bottom portion of the periodic inventory table, okay? And of course, the cost of goods sold is going to be your goods available minus your ending balance, okay? So again, this is review from yesterday, but in this case, right, how we record it in our inventory worksheet is going to be what's different. But everything else, journalizing and posting it to the inventory worksheet in the purchases section is all going to be identical throughout every single method that you're using. It's just the bottom portion when you calculate it that's what's going to be different. So in this case, right, on June 1st, we made a purchase of 100 toys at $1.25 with the freight costing $25. So in this case, we have to journalize that for purchase expense, freight expense, with accounts payable, total of $150. Okay, so we need to pop that into our inventory worksheet, right? We got the purchase expense, right? Or in this case, purchase price, right? Which is your quantity times your unit price. So 100 times $1.25 will give you your $125. Your total cost is going to be your purchase price plus your freight. So gives you your total of $125, right? Plus your $25 to give you a total of $150. Then for this particular batch, we need to solve how much it's going to cost me per item. So that's where we have to solve for our cost per item, in this case for this batch of inventory. Since my total cost is $150, I'm going to divide that by 100, so that means each item that I sell from this batch is going to cost me a total of $1.50. Excuse me. Okay. So then the next one is going to be, we purchased another 100 toys at $1.28 with a freight of 26. So same thing here, right? And we're going to plug it into our inventory worksheet exactly like this, right? 100 of them at $1.28 with, again, you're going to solve for the purchase price of $1.28. Plus 26 will give you $1.54. And then now we need to solve for our cost per item. So in this case, for this second batch of inventory, it's going to cost me $1.54 per item that I sell. Okay. So once we've done that, then I can go ahead and I've reached the end of my accounting period, which is the 15th. Okay. The 15th of June. So that means I need to tally up my totals. So here's my total quantity. I have a total of 200 units at a total purchase price of $253 with a total freight of $51, giving me a total cost of $304. Now, these numbers are going to be very important because these numbers are what we need to be using to plug into our bottom half of our inventory worksheet. Okay? So here's the bottom half of my inventory worksheet, right? I plug them in accordingly, starting with the first one, right? Which is our net purchases, right? We already know, we figured this out, that we purchased a total 200 units at a total purchase price of $253. Now, for the sake of this class, I will not introduce the returns and allowances just yet, but when we do the Chapter 5 review, I'll show you exactly what you need to do in order for you to plug it into this worksheet. So right now, we're going to focus on that there is no returns and allowances. So that means my calculation here for my subtotal, which is going to be your purchases minus your returns, right? That makes sense, right? If you return items, you're not going to add your inventory, you're going to subtract it. So in this case, 200 minus 0 gives you 200. Same thing here, okay? Now, we have to add freight as a separate cost because that's one of those things that is not included as part of the cost to return those items. So in this case, we need to add the freight back in. Freight doesn't add anything to quantity, but it does add to the cost. So in this case, that's exactly what you need to do. You need to add these values together. So 200 plus 0 gives you 200. And then again, the freight was $51. So now you're at a total net purchases of $304, okay, for purchasing 200 items. Now in this case, right, then we move on to the next section, which we already know we don't have beginning inventory. We'll figure out what beginning inventory is later on as we move on. But in this case, since we don't have beginning inventory, we're going to carry the values from our net purchases. We're going to carry that down below. And of course, because we don't have beginning inventory, your total goods available, right? The formula was beginning, which is 0, plus my net purchases, which is here, gives me my total of 200 units at a total cost of $304. Okay? Now, this is where we need to focus on what my inventory items are and how they are listed. So in this case, right, because we need to solve for what my ending inventory is, right, and what my cost of goods sold is. Now, the given scenario tells you that at the end of the accounting period, right, on June 15, you had a total of 80 units left. So there you go. I plugged in my 80 units. So our assumption is if I had 200 units to begin with and I have 80 units left over, I must have sold a total of 120 units. Okay? And that's how you solve for this part, right? Now, that's not the best way to calculate this because what if we took some out of the inventory and placed it on display? What if we sold some and didn't record it? Or what if we broke some? That's where you're going to have to be really responsible to record all of those numbers in your journal. But it has to, and then you'll eventually reflect it in here, whether it's a repurchase returns or a discount, okay? So it's very important that you do keep a track record of that. But at the end of the day, our assumption is this is what we started out with. This is what we have now. our assumption is we must have sold a total of 120 units. Okay? So now we need to solve for my cost of goods sold. Now I already solved for my quantity. I now need to solve for how much it cost me, right? Hence the word cost of goods sold. How much did it cost me to sell 120 units? Okay, so this is where we're looking at our batches of inventory, right? We made 2 batches of inventory, one on June 1st and one on June 8th, okay? So we have 2 batches of inventory. One is, the first batch was for $1.50 each, and then the second batch was $1.54. Now, how do we calculate our costs? Well, by using the rules of Lifo, which batch actually came in last is what you're going to refer as. So that's what this method is. It's taking a look at your batches of inventory and it's using the Lifo method, meaning which batch came in last, and that's the one you're going to sell first. So in this case, my last purchase that I purchased was on June 8th for that 100 items at $1.54. Now 100 units, we can already calculate this, right? It's going to be a grand total of $154, which we already know, right? Because we need to sell 120 units. So in this case, I can go ahead and take that whole entire amount and calculate it, right? I already know it's $154, okay? So there goes the first 100 of items I sold. How many more do I need to keep selling? I need to sell 20 more units. So therefore, if I got rid of my last batch, I only have 1 batch of inventory left, which is the first one, okay? Which is $1.50 each. But in this case, I'm not taking the whole 100. I need to calculate how much it costs me to sell just 20 of those units at $1.50. So that's where I have to do a separate calculation. 20 of those units at $1.50. How much is that going to give me in grand total? In grand total, it gave me $30, right? So what I need to do is I need to add that to the 100 I've already sold. So I take the 154, I'm going to add $30 to it, and that's going to give you my grand total amount that I sold for 120 units, gave me a total cost of $184. Okay? And of course, now I need to solve for my ending inventory. So by you taking that $20, 20 units out, right, you're going to be left over with 80, which is perfect because that's exactly how much you should have left over on hand. So in this case, right, there's 2 ways that you could solve for ending inventory, whichever one makes it easier for you. You can go ahead and just calculate 80 times $1.50. You'd get $120, right? Or what you can do is, which is a quicker, easy way to do that, if you have multiple batches of inventory left over, then the simplest way to do is you take your goods available of $304, right? Because at the end of the day, out of the 200 units that you have, it gave you a total cost of $304. And since I know what my cost of goods sold is, I can just subtract those 2 numbers to get my ending balance of 120, right? If you do the calculations, 304 minus 184, you should still get the same exact answer for your ending inventory. So whether you solve for ending or cost of goods sold, you have at least one component to be able to solve for the entire, to solve for the answer, okay? So once I've done that, then notice this, right? I should have an ending balance of 80 units at $1.50. And again, how we cost the goods sold, it was in fact in order by Lifo, right? Whichever batch came in last is what I sold first. Okay? And there you go. All right? Now, let's talk about conversion, right? Because once you reach the end of the accounting period, you need to do a conversion entry because at the end of the accounting period is where you need to close out your income and your expenses. And a purchase expense is one of those things that you have to close out. Now, again, because you did your calculations here, we have all the information that you need to plug into your journal to successfully close out the accounting period for the periodic inventory. So for instance, right, we know what ending balance of inventory is, right? That's exactly what we saw. We saw for 80 units at $120. We know exactly what the cost of goods sold is because, again, right, we figured out by calculating in our table, right? The idea here is you are converting from an expense to inventory. And how you're doing that is, imagine this. You have a bucket of purchase, you have a bucket that you put all your purchase of inventory expense in, right? As well as your bucket for your freight expense, right? You have a bucket of 200 items, right? But because you did the conversion entry and the calculations in the inventory worksheet, we know for a fact that I have 80 of those units. So that means I got to take 80 units from my purchase expense and move it into my inventory on hand. And that means whatever's left over, I sold it and I got to empty out my purchase expense and freight expense bins into the cost of goods sold because I end up selling 120 toys at the end of the period. So therefore, my purchase expense and my freight expense, they're going to zero out each other, right? Because you're emptying it out. You're moving them in from one account to another, okay? And you're moving it into inventory. So you're recognizing that you have inventory on hand left. And you're also recognizing that you sold some units along the way, okay? So that's how we understand this conversion entry. And again, from the inventory worksheet, you already solved everything. So all you have to do is just plug in those numbers into their respective spots in the journal. So again, first thing you need to recognize is you got some leftover inventory, which is an asset. So you increased your asset. So there you go. You increase the cost of goods sold, which is selling your items. And it's how do you get rid of those items? You calculate as a cost of goods sold. And you are zeroing out your purchase expense and freight expense accounts. So there you go. Okay. All right. Okay. So what happens when you actually have beginning inventory? Of course, you need to carry these values on to the next accounting period, right? So in this case, right, we know for a fact that if you're continuing on with this inventory, right, on June 15th, you should have a total of 80 units costing at a total of $120, right? We know that because we calculated it, right? This is something that is going to be a constant working worksheet, right? You're constantly updating it at the end of the accounting period or every time you make a purchase, you need to continue on so that you're not starting over every single time. So in this case, we know for a fact that on June 15th, I did have ending balance, and what happens that ending balance is it becomes your beginning balance. It's what you started out your inventory with, okay? So in this case, I have 80 toys available on hand that I can sell, okay? And when we refer to this, right, this is going to be considered, right, your batch that you had since June 15th, okay? So that's what you have to understand. So in this case, right, you have a section on your inventory worksheet for inventory on hand, okay? And this is what you got to do. You got to put it in here because this is going to be used as your beginning inventory, okay? So there you go. You put the 80 units costing at $1.50, giving you a total of $120, okay? So then, now we're going to go on to the next part. For the purchases of inventory, right? We made a purchase of inventory on June 18, 100 of those units at $1.27 with the freight of $25. So again, you're going to rinse and repeat and continue doing the same thing, right? You need to solve for your purchase price, okay? Which is $127 plus the freight of 26 will give you 25, which give you a total of $152. And then same thing again. You have to rinse and repeat. How do I solve for the cost per item, right? Your total quantity of 152 divided by your total cost of 152 divided by your total quantity of 100. Your batch for this one is going to cost you $1.52 per item, okay? And of course, you're going to do the same thing for the second batch of inventory until you finish up your accounting period. So in this case, right, the end of my accounting period is going to be the end of the month of June. So June 30th, you should have a total of 200 units purchased, right? For $257 with a freight of $51, giving you a grand total of $308 total cost. Okay, so once again, once you solve at the end of the accounting period, you're going to carry those values back into your inventory worksheet, just exactly what we've been doing from the previous worksheet. The only difference is now, right, after I figure out what my net purchases are, now I have a third component here. I have to enter in my beginning balance because that's what I started the accounting period with, right? I had 80 units, total cost of $120. I need to plug that in because now I'm going to group everything together, right? I have my beginning inventory plus my net purchases will give me a total goods available to be 280 units. That's how many I have available to sell, okay? And that gave me a grand total of $428, okay? So that's what we had to do in our inventory, right? Now we have our first batch, which is what I started the beginning with, right? I started with 80. I made 2 purchases of 100 units, okay? That cost me one at $1.52, and then the second one cost you $1.56. So now I have 3 batches of inventory, technically, okay? And now I need to solve for the rest of my table here, which is figuring out how much is my ending balance and figuring out what my cost of goods sold is. So in this case, that's what we have. We have 280 units available to sell, okay? And we know for a fact that someone did the physical count and told you that you had 60 left on hand. So that means if I started out with 280 and I only have 60 left, right? My assumption is I must have sold 220 units, okay? So then there we go. Now I need to start my method all over again and start calculating my total cost of goods sold, okay? So starting off with looking at our batches of inventory. We have 3 batches like we mentioned before, right? 80, 100, and 100. Since we're using the rules of Lifo, okay, which batch came in last? In this case, this last batch that we have that we purchased on the 23rd of June, right, which was that 100 units at costing me $1.56, that will be the first batch I'm going to calculate. That's the first batch I'm going to get rid of. So in this case, I have to get rid of a total of 220 units. So in this case, that's only going to get rid of 100, okay? I still have to sell 120 more. So I move up the line and see how many more I need to keep selling. In this case, my next batch of 100 is going to be gone completely because I have to sell 120 units. So therefore, that's what I got to calculate, okay? Now I need to sell a total of 20 units. Well, I only have 1 batch of inventory left. How much is it going to cost me per item? I'm not taking all 80 units. I'm only taking 20. So 20 times $1.50 because that's how much it cost me per item, right? I have to calculate that. And that's going to give me a total of $30. So then you're going to tally up your totals to get your total cost of goods sold. In this case, to sell a total of 220 units, I got a grand total of $338 even, okay? And of course, how do I calculate my ending balance? Well, I have 60 units left remaining at $1.50, so that's going to give me my total ending balance to be $90, or I can simply just take my 428, subtract the 338, and I should get 90. Okay. Any questions in regard to this? And then, of course, you complete the conversion entry. But here's what you have to have included. When you have beginning inventory, right? Think of it this way, right? You're gathering up all your total purchases. You're gathering up your total beginning inventory, and then you're going to go back through the process again. You're going to distribute, right? You're going to empty out these boxes one at a time, these accounts one at a time. So purchase expense, freight expense, and then your beginning inventory. And you're going to distribute them through the two accounts, right? As your ending inventory, as well as your cost of goods sold, okay? Because we had a total of 280 units to sell, right? So in this case, what happens is that your ending inventory, which became your beginning inventory, turns out to become your ending inventory again. Okay, because in this case, right, we started out with beginning inventory, but because we use the rules of Lifo, we end up keeping that remainder of the beginning inventory and basically put it back into the ending inventory. So that's why in this case, we never spent it. We're just transferring it back into the same account it originally started out with. But that's how we understand the conversion entry, is that you're trying to gather all of your inventory that you have available to sell and basically redistributing them back into their appropriate accounts for inventory. And of course, you sold some along the way, so you have to designate it into the cost of goods sold. Okay. So any questions in regards to the chapter 5.5 LIFO costing method? Okay, so again, when you do purchases, you got to do a purchase expense, freight expense, right? Your conversion entry is going to include your ending balance, cost of goods sold, purchase, freight, and then your beginning balance. Yes.
So we'll have all this purchase until we sell out the item. That's a way to look at it.
Yes, right? Correct, right. You're just, during the period, what you're going to be doing is you're just collecting the information on your purchases only, strictly only. Because in this case, right, we don't care about how many items we sell, right? We don't care to keep track of it. We only keep track of it when we go down to the basement, take a physical count at the end of, the day, the end of the week, the end of the month, however you do your inventory checkup, right? Then you proceed with the assumption that if you don't have it anymore, you must have sold it.
Okay.
So so this, for periodic inventory, that's what you're constantly keeping track of, is just your purchases until you reach the end of the accounting period. All right. Any other questions? Okay. All right. If not, let's go ahead and get started with our inventory exercise here. So here's the 5.5 inventory worksheet example here. Okay. If you guys had trouble working with the first one, that's okay. I will review it. But in this case, we're focusing on very, very simple ideas here. So all we're really doing is, it is the same exact scenario. Only difference is when you actually start calculating the cost of goods sold is where it differs. Okay, so let's go ahead and practice this real quick. Okay, I believe your first one, I had you practice the to journalize. In this case, let's go ahead and practice journalizing the first section, since we'll have you practice doing this section so you guys get familiarized with this, on how to journalize something and then post it to your inventory worksheet, okay? So we'll practice just for the first scenario, first set of scenarios, and then we'll go ahead and practice the inventory worksheet more, okay? So the date is there. So first thing that happened was, okay, here's your scenario. Okay, your inventory method is periodic and it's LIFO, okay? So first thing that we did on April 5th was we purchased 1,000 units at $5 each with a freight cost of $100. So this is what I'm going to assume. I'm going to assume that I made these purchases on an account, okay? So how do I record the purchase of the inventory? Because in order for a transaction to actually occur is money needs to be transferred or you need to receive the actual inventory item. So in this case, just ordering or just purchasing itself doesn't really necessarily mean you have the items, okay? You have to receive the items for you to be recognized that you have the inventory items, right? But in this case, that's what it says here. On April 5th, I purchased a total of 1,000 units at $5 each, with the freight costing $100. Okay, so how do I journalize this transaction? How do
We put the purchase expense,
purchase expense, right?
and then we also have to have a freight expense.
Purchase expense, freight expense, and if I am assuming I'm purchasing it on an account,
So we'll put it account payable.
good, right? Because we now owe whoever this vendor is some money, okay? Now, in this case, your description can be whatever you have here. So I don't actually have that much information. I don't have a vendor or anything. But I do know that I purchased 1,000 units at $5 each. Okay? So in this case, if I purchased a total of 1,000 units at $5 each, what is my total purchase expense?
It's 5,000.
It's $5,000, right? And what did my scenario say? How much did freight cost me?
$100.
$100. So in this case, how much do I owe in grand total on an account?
5,100.
Yes, right? That's how much I owe. Okay. Now, once I have that journalized, right, I have proof that the transaction has occurred. Now I need to plug it into my inventory worksheet. Okay, so I'm going to go to inventory worksheet question number 1. Okay, so this is what it looks like, okay? No beginning inventory, so I only need to focus on this section, which is just primarily recording just my purchases. So in this case, I purchased on April 5th 1,000 units at $5 each with a freight of 100. Okay, so again, how do I solve for my purchase price? What's my purchase price?
It's 1,000 times $5.
Yes, right. Quantity times unit price. Okay, since I'm using Excel, I'm cell referencing, right? Instead of having to type it in there, which you can do if you'd like. But the great thing about cell referencing is you're able to copy and paste formulas all over Excel. So that's what I like to do because in this case, we do find shortcuts when we actually figure out what you're trying to do. So in this case, I'm cell referencing, right? I'm saying that 1,000, and I'm using the symbols on the keyboard to do my calculations, right? I typed in, or in this case, I clicked, right? 1,000 times the $5, and then when I press enter, that's going to automatically calculate for me $5,000, okay? What's my total cost going to be?
It's purchase price plus freight expense.
Purchase price plus freight expense. Okay, purchase price plus freight expense will give me a total of 5,100, right? I took my purchase price of 5,000 plus my 100 and I got 5,100. What about my cost per item?
We need to divide the total cost by the quantity.
Yes, so that's exactly right. Total cost of 5,100 divided by my total quantity of 1,000 should give you $5.10. Okay? All right, that's the first one. So let's see what happened next. Okay? April 10 rolls around. They purchase of 750 units at $5.75 with a freight cost of 75. Okay? Once you get the hang of this, what you can do is you can plug your numbers into your inventory worksheet. But what happens what I normally find that a lot of students do is once they plug into the inventory worksheet, they forget to journalize it. Okay? But it also saves some time instead of having to do two separate calculations, right? You're saving yourself some time by doing one calculation. But in this case, this is pretty straightforward and simple numbers to calculate. Okay, so in this case, on April 10, I purchased 750 units at $5.75 each with a freight of 75. So in this case, let's practice journalizing. I need to journalize for April 10th's purchase. How do I journalize this? Okay, how do I record that I just purchased 750 units at $5.75 each? Right? I'm gonna end up repeating the same process, right? I just purchased some more inventory, so therefore it's going to be the same exact transaction, right? Only difference is I have different numbers I'm calculating, right? Instead of purchasing 1,000, right, I can go ahead and edit this information and say I purchased 750 units at $5.75 each, right? And of course, with us being able to edit the information, right, that means I can also figure out what these numbers are. Since it's a copy and paste, right, since I already have the journal already existing, right, the great thing about technology is you can use your keyboard to copy and paste your transactions instead of having to type it all out again. This will save you time because I don't have to do the transaction again. I could just simply copy and paste from a previous transaction and paste it into my journal accordingly. Okay, so in this case, I bought 750 units at $5.75 each, which gave me a total of $4,312.50, right? And how much did it cost me for freight? It cost me $75. Okay, so that's going to give me a grand total of $4,387.50. Okay, and see, I also even used Excel to just add up the numbers that are in my column right here, right? So that's the great thing about using Excel to record your transactions, okay? So now that I have this, let's go ahead and plug it into my inventory worksheet, okay? It is April 10, okay? We purchased 750 units at $5.75 each with a freight of 75. So in this case, if you are using Excel and you have cell reference, so in this case, let's do that cell reference again, right? I'm not typing those numbers in there. I'm clicking and putting it into a formula, and I push enter. We call this relevant cell referencing, right? When we do relevant cell referencing, that means it will carry the formula, right? I can copy and paste the formula in here. So instead of typing it all over again, when you roll your mouse into this little corner right here, if you really, it's really small. if you actually go to the very bottom right corner, right, and you select this cell, you can see that there's a tiny green triangle right there. If you roll your mouse over it, your mouse should change into a plus sign, okay? Not the puffy plus sign, but the black plus sign, right? That allows you to copy the formula that's in that cell and paste it into this exact following cell. And because I'm using relevant cell referencing, right, it's going to take the information from the cells right below it and matching it to this row. So that's what relevant cell referencing does, is it helps you save time in calculating your transactions. So that means I can go ahead and, well, I added something there. That means I can go ahead and drag this formula all the way down to the bottom of my transaction, so that every time I add something in here, whether it is, for example, right, if I add in 500 and let's say I paid $6 for it, it's going to automatically calculate it for me. So that's why using programs such as Excel helps you and allows you to do accounting a lot more quicker and much more efficient. Okay? And of course, I can drag that formula all the way down for this as well, because in this case, I told Excel right here, I said I want my purchase price plus my freight expense to give me my total cost, right? So here it gave me a total cost of $4,387.50. And of course, I can also do the same thing here because I also put another formula there, okay? So this is going to give me a total of $5.85. Now notice this. All of this, right, for the ones that are blank, has this pound sign, divide, dash, whatever, right? That's just because these cells are empty. Okay, that this does is not an error code. This is just saying that there's nothing in the cells for you to divide. So that's okay. You can leave that, because as you fill in the numbers in those cells, it will calculate for you. Okay. All right. So then, April 25th, we purchased 500 units at $6.25 each with a freight of $50. Oh, I think I skipped one. Sorry. April 20th, right, we purchased 200 units at $6 each with a freight of $20. Okay? So again, we can journalize this. It's the same exact transaction here. The only difference is the numbers that we are using to calculate it. So this was for April 20th, right? We purchased, right? We purchased 200 units at $6 each, okay? With a freight of 20. So there you go. I can type it in here. 200 times 6, okay, plus 20 will give me my total amount that I owe to this vendor to be $12.20, okay? All right. So now that I have that transaction, let's plug it back into my inventory worksheet, because now this is where it's going to, I just purchased another 200 units at $6, right? So there you go. Boom. It calculated for me that it should be 1,200, right? 200 times 6 gives you 1,200. And I had a freight of $20. So that should give me a total cost of $12.20. And it already calculated for me because I filled in my rows that I was missing, right? In this case, column for my total cost was $12.20. Divided by my total quantity of 200 should give you a total cost per item to be $6.10. So again, this is the trick of why we use Excel to do accounting. Yes, you can do this manually on a piece of paper, pen and paper with a calculator, right? You still get the end result, but it does take longer for you to do because you have to do it manually and you're writing everything down manually, okay? So that's the only difference. Is the concepts is all the same, But for this kind of class, right, that's the purpose of us learning and training to use Excel to train us how to be able to bookkeep for a company. How am I calculating this? How am I getting the results a lot quicker, and how am I moving quicker? Okay. So let's do the last transaction here. Okay. Last transaction is that on June 25th, we purchased 500 units at $6.25 each with a freight of $50. So if you wanted to do this, right, again, April 25th, we purchased 500 units at $6.25 each with a freight of $50. This right here, right, now this is what I can do here. Since I plugged into my inventory worksheet first, I can go back and I already know my answers because here I've already solved for my purchase price. My purchase price should be $3,125, and because I added my freight here, my total that I'm going to owe is $3,175. So in this case, this is where I can save myself the time. Instead of having to calculate it twice, I've already done the calculation, okay? So that could also speed up your process of plugging the numbers into your journal, okay? Because in this case, I already solved for my purchase price, right? I calculated it to be that $3,125 plus $50, right? Should give you the grand total of your the $3,175. Okay, so in this case, it allowed me to move a lot quicker because I already did the calculation. I don't have to calculate twice. Okay, and I just need to make a few adjustments to here, such as 500 units at $6.25. Yes.
I just feel that if we keep using the cell to put the formula in, isn't that harder for us to catch the mistakes on journal?
Absolutely correct. But again, that's why 95% of accounting errors actually comes from humans. It's not the program, right? Because who's inputting this information? You are.
Yeah.
So you are going to have to be very meticulous, right? And very, very focused on going over your mistakes. That's why as we go through the accounting cycle, right, there'll be lots of different methods and procedures to help us prevent from making those mistakes. Okay. Because at the end, when we dive into the accounting class project, right, where we're actually looking our books from and bookkeeping for a small business, right? There are some standard procedures that allows us to keep checking our work over and over and over and matching them into specific sections. Okay. Right now, all we need to worry about is, do my debits match my credits? Am I properly journalizing? I'm practicing journalizing, okay? When we dive into the class project, that's where everything that we do will have us a reason why and how we can double check and confirm whether accounting is correct or not by us taking those procedures and steps that we have to do to ensure the accuracy of our accounting is to go through the entire accounting cycle. So you will be looking at multiple worksheets to match your answers. So if you did not get this answer from one worksheet, there you go. That's how you know you did it wrong. Okay? Now again, 95% of accounting errors do come from humans because we're the ones that's entering all the data. So yes, it may not, you may think it's correct because it may pass through the procedures, but again, you're not the only person that's going to be the sole person that's going to be looking at this book, right? You have a bookkeeper, you have the accountant. The accountant's going to overlook the bookkeeper, making sure that their transactions are correct. So they, it's a team effort versus just one person. Okay, you're always going to have someone who's constantly checking your work. Okay? Now, and especially when your end result, right, when you finish your accounting period, things are not something you have a hunch when you look at the numbers that come out doesn't look or doesn't seem right, then you would just have to go through your entire bookkeeping process and just go through each transaction one at a time. So at the end of the day, it can be actually very tedious, and the workload can be a lot, especially if you're double, triple, quadruple checking your work. Okay. So yes, now a problem with cell referencing too is if you have too many books open and you start copying transactions from one book to another, sometimes they don't make a connection and it can causes errors in your books. So yes, that is also something that, problems happen with programs, and that's just unfortunately one of those problems, is that if you use cell referencing too much, it can cause, errors in your spreadsheets. Okay. All right. So there you go. We plug that number in, and then we reach the accounting period. So at the end of April, you should have a total of 600 units remaining on hand. So in this case, I have a total of 600 units on hand on April 30th. Okay. So that means I reached the end of my accounting period. So that means I have to go ahead and tally up my totals here. Okay. Now in this case, I'm going to tally up my quantity. So I have a total of 2,450, right? We know that from our previous inventory worksheet. Okay. Right, from the previous example that we did earlier yesterday. And for any reason that you have a bunch of pound signs, it just means that your window's just too small. You just expand it, right? So you have your total sum of purchases to be $13,637 with a total freight of $245, which gives you your total cost of, there you go, $13,882.50. Okay. You don't necessarily need a sum of your total cost per item or your unit cost, because those ones, you don't need this information for anything, right? That would just be extra information. Okay. So I'm going to highlight this because these numbers are important, right? They are important to your net purchases, right? So in this case, how many items did I purchase? Well, we purchased a total of 2,450. Now, what was my total purchase price, right? Before the freight. In this case, I purchased a total of $13,637.50. In this case, we don't have beginning inventory, so my assumption is I have returns and allowances and discounts, right? I didn't have any, okay? So in this case, it's 0, okay? We didn't make any returns for this one. So in this case, that is what's going to subtract. So as you can see here, on the left side here of the column, it gives you a guideline on whether you need to add or subtract these values, okay? So in this case, I have to subtract, right? Because it's a return. Did I return the products? In this case, I returned none. So you're supposed to subtract, okay? So that's going to give you the exact same amounts because you didn't have any returns at all, okay? Next is going to say you're going to now add the freight. Freight adds 0 to quantity, but it does add the $245 to the total cost. So then, because they are being added, right, you just add these numbers together, right? You get a total of 2,450 units at a total cost of $13,882.50, okay? And of course, you can, for purchases, since you don't have any returns or allowances, you could just reference to this as well, right? That you should have a grand total of $13,882.50, okay? Now again, because we didn't have any beginning inventory, right, that means we're going to carry our values down from our net purchases, right, copy them down, right, and the formula here is you're supposed to add your beginning balances? I don't have any, so that means your net purchases is going to become your goods available, right? Because you're adding nothing to your net purchases, so your goods available is going to be the 2,450 units at $13,882.50. Okay? So again, when we reach the end of our accounting period, we said that you had a total of 600 units on hand. Okay? So that means I have 600 units left, right? So in this case, how do I calculate what my total goods, cost of goods sold is in quantity? Well, if I started out with a quantity of 2,450 and I have now 600 units left, right? I simply subtracted 2, and that's going to tell me that I must have sold a total of 1,850 units, right? And then I now need to solve for my total cost of goods sold, okay? So this is what I'm going to do, okay? I'm going to go ahead and build my table here, right, to help me calculate what my total cost of goods sold is, okay? And I'm going to reference it, okay? I'm going to use this light blue to represent my total cost of goods sold. So in this case, I can build a small table if I really wanted to, just so then I can be able to see where my cost of goods sold is. Okay, so let's see, right here, merge, okay, and I'm gonna call this my cost of goods sold, okay? So right here, what I can do here is I can have a running balance by automatically calculating for me what the total of this column is, okay? So that's going to give me a running balance or a reference point to let me know how many items I need to sell and how much more I need to keep selling, okay? And this is also going to give me my tally up total, so I don't have to keep constantly adding, right? I can just use Excel to add it up for me, okay? So starting with Lifo, right? Which batch of inventory am I going to sell first if I'm using Lifo?
The newest batch.
The newest batch, which I purchased on
25.
April 25th. Correct, right? That's the last batch of inventory that I purchased, which was a total of 500 units. And how much is it going to cost me? Well, we're looking at the cost per item, right? Because we want to include the price it costs to cover shipping, right? This is what we want the customers to pay. We want them to pay per item that we sell, right? We want them to cover the entire cost, so we don't have to pocket it out ourselves. So in this case, it's going to cost me $6.35 each. But in this case, right, I need to sell a grand total of 1,850 units. So in this case, I can just go ahead and take out this entire batch of 500 because I need to sell a total of 1,850 units, right? That means I can get rid of this entire batch of inventory. So I don't have to do any calculations. I can just copy and paste it right down here because I know that entire batch of inventory is going to cost me $3,175, okay? And of course, you could use the cost per item, right? This is just a reference point so you know exactly which batch of inventory you just took out from, okay? So there you go. I sold my first 500 units, okay? How many more do I need to keep selling?
1,350.
1,350. So that means I have a long way to go. Now, again, you can also use Excel to make sure that you are taking out the correct inventory, you can strike this through, right? You can black it out however you like, right? Just so then you can keep track of it. Now, here's the rule of thumb. Do not delete anything that is in your worksheet. No, 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 because that is what's going to harm you, okay? I did it in the PowerPoint just to show you how we would look at it, right? In this case, when we're dealing with our inventory worksheet, no, 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 no. You should not delete anything in there, because watch this. So if I were to delete it, right? Let me format it real quick. That I want this to be strike through. Okay? If I were to delete this, right? If I said I got rid of my 500, because I'm self-referencing, it's going to change this value here, and because I use that here, right, it's going to change all your numbers here, and now all my numbers are messed up, okay? So that's the dangers of using Excel as well, is if you do delete something that you self-reference, you would actually end up messing up a lot of things that are in your worksheet. So rule of thumb is, if you are going to be using Excel exactly like how I am, where I'm self-referencing a lot of things, your rule of thumb is you should not delete anything because of the dangers of linking all of your formulas together. So in this case, I can just strike it through so I know I got rid of it. So the next one here is, which batch of inventory am I going to take from next, using the rules of Lifo?
Second oldest one. I mean, second newest one.
Second newest one, which is April 20th for 200 units. So in this case, 200 units, that's way more. That's way more. Excuse me, that's less than what I actually need to sell, right? I need to sell 1,300. I can get rid of this entire batch of 200. So again, I can cell reference it so I don't have to type it in. And since I'm going to get rid of all 200 items, and we already know what that cost is, right? It's going to cost me $1,220, right? So in this case, I don't even need to calculate it. All I need to do is just cell reference it, right? And because I have my running balance here, right? This is my equal sum, right? To give you my grand total of that column. So far, after selling that 500 and then that extra 200, I sold a total of 700 already. And it's already giving me a grand total of 4,395, right? Because I used the formulas to add up my columns, okay? So I sold 700 units. I need to sell a grand total of 1,850. So how many more do I need to keep selling?
400.
We need to keep going. So in this case, I can go ahead and strike through this just so then I can keep in mind I already got rid of this inventory right here. Okay. So I can keep going. So the next one is 750. Ooh, 750. Am I going to use all of it or some of it? How many more units do I need to keep selling? Exactly. We need to sell 1,150 units, right? So in this case, my 750, I can go ahead and get rid of that entire batch as well. Okay. So there you go. 750, which cost me $5.85, which I don't need to calculate because I already know this grand total amount. So in the beginning, running all of it, it's going to cost me $4,387.50. Okay, so there, now I'm left with $1,450 that I've sold so far. How many more do I need to keep selling?
400.
400, right? If that's something that you can't calculate, you can also use Excel to try to figure it out for you. So in this case, I can say 1850 is my end goal. And so far, I sold 1450. How many more units do I need to sell? I need to sell 400 to get me my grand total of 1850, okay? Now in this case, right, at this point, we only have one batch of inventory left, right? Because we've already sold these 3 inventories. So in this case, right, am I going to sell all 1,000 of those units?
No.
No, I only need to sell 400. So in this case, I need to figure out how much it's going to cost me per item to sell from this batch. So in this case, what is my cost per item for this batch of inventory?
$5.10.
Good, right? $5 is what you purchased it for. We're not talking about the unit price. We're talking about including the freight charges in there for your customers to cover that as well. You don't want to pocket out that $100 from your business to pay for this expense, right? It should be included as the part of your inventory. So in this case, I've already calculated it to be $5.10. That's what it's going to cost me to sell, okay? So in this case, that's exactly what I do. That's how much it's going to cost me per item is $5.10, okay? So in this case, right, now I just have to figure out how much does it cost me to sell 400 units at $5.10. This is where I now need to do a calculation. So I can simply take my quantity times my cost per item, right? And that will give me a total of $2,440, okay? And then that's going to give me my grand total, since I have my running balances, to sell a total of 1,850 units. I had a grand total cost, right, of $10,822.50, right? That is my grand total, right? Now, that means I should have 600 units left remaining, okay? Now, again, that was just one way of calculating the cost of goods sold. If you already kind of figured this out already, right? If you understand the rules of LIFO, that when you're going to be costing your inventory, you're going to start from the bottom and make your way up from the top. Now, again, a shortcut to this is, well, let's take a look at my ending inventory. I have 600 units left. Well, if I'm going to sell everything from the bottom and make my way up to the top, that means my ending balance must be from my very first batch of inventory I should have left. So that means that should be my ending balance right here, is going to come from my first purchase of inventory, okay? If you understand that much already, then you can just simply calculate your ending balance and then solve for your cost of goods sold quicker that way, okay? Because I could say this, well, I have 600 units left, and if it's going to cost me $5.10, then my ending balance is going to be my 600, right, times that $5.10, right? If I go ahead and did this calculation right here separately, right, I would have figured that I should have a total leftover remaining of $3,060, right? I could have solved for my ending balance just like that if I already understood LIFO, meaning if I'm going to sell my inventory, I'm going to start from my bottom and make my way up to the top of the batch of inventory. That means my leftover should be at the top, okay? If you understand that, you would solve for this a lot quicker, okay? But again, I'm teaching you how to do it this way. However you get to the answer is, as long as you get to the answer, is all I care about. I don't care which method or which way that you get to the answer, as long as you get to the answer, okay? That's the beauty of accounting, is I don't care what way as long as you get to this answer, because again, accounting, there is an answer for everything. Okay? There is a correct answer and there is also a wrong answer. So if you don't match my inventory worksheet, or if you don't match the answers that I get, then you did something wrong. Okay? So in this case, right, or I could simply take my goods available of $13,882.50, subtract my $10,082.250, and get the same exact answer of that $3,060. Okay? So again, you can solve for either or, any way that you get to this exact answer. Okay? Any questions so far on how to use the inventory worksheet? No questions? Okay. I'm just going to quickly format this real quick so you kind of understand where this number came from. This is your ending balance. Okay. So you got your ending balance here. You got your cost of goods sold, which way ever you prefer. Now, since I reached the end of my accounting period, right, I now need to complete my conversion entry, right? What should my conversion entry have? Okay, since at the end of June, what should my conversion entry have? How do I journalize my conversion entry?
We have inventory.
Good, you have your inventory.
And then we have a cost of goods sold that we just calculated.
Cost of goods sold.
And then we have a purchase and flight.
Good, purchase expense and freight expense. Okay, so let's go ahead. Let's plug in our numbers. What was the total value of my ending inventory in cost?
$3,060.
Excellent, right? Why can we not use 600? That's the rules. Remember, if you remember in chapter 4, that's the monetary assumption rule, is you cannot put things in the journal in terms of quantity. It has to be in terms of total value or cost. So in this case, I can only record $3,060 of inventory. Okay? How much was my total value of my total cost of goods sold?
We said $10,822.50.
Good. What was my total original purchase price?
Was $13,637.50.
Good. And then what is my total freight?
245.
Yes. And of course, rule of thumb here is you should ensure that your total debits match my total credit. So in this case, I got $13,882.50 on the left to my $13,882.50 on the right. So in this case, we ensured we did our accounting correctly, right? And I can write here, say, to convert periodic inventory. Okay, and of course you can make a note saying that you have 600 units on hand, and then you can also make a note saying you sold 1850 units. Okay, whatever piece of information that you find necessary to support this transaction. Okay, all right, so that's part 1 of the inventory worksheet. Now, I'm not going to have you journalize the second transaction just because you have, it's rinse and repeat. It's the same exact journal entry. The only difference is the number. So I'm only going to have you just do the conversion entry for the second time around, okay? So what I'm going to do is, let's go ahead and plug in our values and start on question number 2, which is, what do you do when you have beginning inventory? Well, or sorry, question number 3. question number 3 says your inventory, right? You can continue your inventory exercise, right? Your inventory method is still periodic and it's still LIFO. But here's the difference. You have beginning inventory on April 30th. You had a total of 600 units left on hand. We know that because this is a continuation from one worksheet to another, right? We're ending the accounting period at the end of every single month. So that means we're going to adjust our inventory every single month. So in this case, we're going to carry these values over from our previous inventory worksheet into our new inventory worksheet. Okay? Okay, so for instance, right, once you complete your inventory worksheet, you can't continue using this inventory worksheet, right? Because all your numbers will change, and that's what you don't want. What you want to do is you want to start over a brand new inventory worksheet, but plug in information that you do have, such as right here on inventory on hand, right? Because you do have ending inventory, right? Which is also your beginning inventory. As of April 30th, you had a total of 600 units, right? Which you've calculated, right? Which gave you a grand total of that $3,060, right? That was your ending inventory. So you're going to carry, over here. You're going to carry this value over to your new inventory worksheet, okay? Now in this case, you can solve for your cost per item again here, which is still a 510, right? Because you know that for a fact because you're carrying the information from your previous worksheet into the next one. And this right here is going to be your beginning inventory. Okay? So let's see what has happened next. Okay? On May 5th, you purchased 500 units at $6.25 each with a freight of $50. Okay? So you're going to plug these in. May 5th, you purchase another 500 units at $6.25 with a freight of $50. Okay? So therefore, right, what's my purchase price? Right, my purchase price is going to be my quantity of 500 multiplied by my unit cost of $6.25 should give you that 3,125. Okay, we're going to figure out my total cost, right, which is my purchase price plus my freight of 50 to give me $3,175. So again, this is the same exact transaction that you occurred previously, but that's okay because we're starting a new inventory worksheet. Just continue doing on what you're supposed to be calculating. So you're starting pretending that you didn't have an idea. Now this is where I want you to make sure is that you are not combining it with your inventory on hand. This section is only your purchases only. Your right side, that column is for your beginning inventory on hand. So you do not mix them here. You mix them later down in your in the workspace section for the inventory worksheet. Okay. So in this case, what is my cost per item? Right. You're gonna take your 3,175 and divide it by 500, which should give you $6.35. Okay. So, May 10, we purchased 800 units at $6 each with a freight of 80. Okay. So same thing here. May 10, this time we purchased 800 units at $6 each with a freight of 80, right? So by plugging in all of these numbers in here, again, if you're using self-referencing, you can be able to solve these much more quickly. So in this case, right, 800 times 6 gives you 4,800 plus 80 should give you 4,880. Okay. So now I need to solve for my cost per item, which in this case, right, you're going to take your 4,880 divided by my 800 units to get $6.10. Okay. All right, so everything is going to be the same, right? You're going to continue on with your purchase on May 20th, right, which you purchased 300 units at $6.15 with a freight of 15. Okay. May 20th, purchase of 300 units at $6.15. With a freight of 15. Okay. Then, if you have already filled in your formulas already, right? This amount gave you 1845, right? 300 units at 615. Plus 15 should give you 1860. And again, that should give you $6.20 each. Okay. Last thing I have here for purchases was May 25th. We end up purchasing 100 units at $6.30 each with a freight cost of $5. Okay, so that one should be straightforward. Okay, you got 100 units at $6.30, so that should give you $630, right? Plus $5 will give you $635, right? And of course, if you take $635 divided by 100, your cost per item is going to be $6.35. Okay, so there we have it. Okay, we reached the end of our accounting period. So now we have this one last thing because someone went down to the basement, took a physical count of your inventory, and told you on May 31st, you have a total of 400 units left on hand. Okay, you have a total of 400 units left on hand. Okay, so that means you're done with your inventory and you need to figure out your total cost. But what I can do here is, since I know my ending balance is going to be 400 units, right? Let's go ahead and solve for our numbers here. Okay, so we know for a fact, okay, that we need to gather up our grand totals of quantities, purchase price, and our freight in total cost. So in this case, how much units did I purchase in grand total? You purchased 1,700 units, okay? At a total purchase price of, right? Again, my grand total purchase price was $10,400, okay, plus 150, right? That's easy math. You can do that, right? 10,550 is your total cost. Yes.
Sorry, I hit the wrong button.
Oh, okay. No worries. Okay. So there you go. Now you have your total cost of $10,550, right? And don't forget, we do have our beginning balance, but right now we're going to hold off to that section right there, right? We're going to want to figure out what my net purchases are, okay? So copying these cells down here, right? How much did you actually purchase? Well, I purchased 1,700 units at $10,400, right? I don't have any returns or allowances, so therefore my subtotal should be equal to my what I purchased, right? Freight, once again, adds 0 to quantity, but however, it does add that 150, right? It adds to the cost. So in this case, since I have to add up my columns up, For my net purchases, I purchased a total of 1,700 units at a total of 10,550, right? We know that, right? We already solved it from above in our purchases, right? But this number doesn't always match each other because when we actually introduce the second part, which is having purchase returns and allowances and discounts, then yes, these numbers will be different, right? And we're going to utilize the inventory worksheet a little more, okay? But for now, I'm teaching you the first basics first. So right now, your net purchases is going to be 1,700 at 10,550, okay? So this is the section where I do have beginning inventory, right? Because in the beginning of, at the end of the accounting period for my previous one, right? I ended my inventory on April 30th with 600 units, right? But if I'm going to begin my accounting cycle as of May 1st, your ending will eventually become your beginning, right? So in this case, I carried those units over from my previous inventory because this is something I need to consider, that I have available inventory on hand to sell. So I would like to include that instead of rack up a total of my ending inventory, right? What's the purpose of that? Okay, so in this case, I have 600 units, okay, at a grand total of that 3,060, right? And what I'm going to do here is I'm going to carry what I purchased from above, right? My net purchase, I'm going to carry it down, okay? And then that's going to allow me to let me know how much items I have in grand total available to sell, okay? So I add those two numbers together, right? 1,700 plus 600 gives you 2,300, okay? I'm going to add those two values together to get a grand total cost of goods available to be $13,610, okay? And here it tells me I only have 400 units left, okay? So that means my assumption is, right, I must have sold a total of 1,900 units that I sold, okay? And once again, let's build my table so I can calculate how much it's going to cost me to sell that grand total of the 1,900 units, okay? So what I can do here is I can build my table, okay? So I know for a fact, okay, I can build my table here, or I can build my table here, okay? I'm going to call this my cost of goods sold section. You can do this, or you can have it at the top, of course, but I want it next to each other so you can kind of see. And what I'm going to do is I'm going to create my running balances in my columns, okay? So then I don't have to calculate it manually one at a time, right? What I'm doing is I'm eliminating the process so then I have a constant running balance and it's going to constantly calculate my numbers accordingly. Okay, so this one, I so far have 0 items sold, and this is going to be my total cost. Okay, so once again, yes.
So since we know unless we sell out everything, the 400 ending balance always have to come from the oldest batches, isn't it?
Correct. In this case, in this specific, because you're using Lifo,
kind of give you an idea for how far batches we sold.
Correct.
And which batches we have left with.
Correct. Again, you can see it however you'd like, right? In this case, you recognize, well, if I take that concept, right, if I know for a fact that when I sell out my goods, if I'm using Lifo, I'm going to get rid of all of the batches I purchased. So that means I should be left over with whatever the oldest inventory batch was.
Yeah.
That is another way that you can solve for it. Okay.
Okay.
Okay. So if you did solve it that way, then you can get the answer quick as well too. But in this case, right, I'm going to teach you how to do it by calculating through the cost of goods sold, because that is technically what the costing method does. It shows you how you are calculating how much it costs you to sell out your inventory, right? Our job isn't to solve for ending inventory. Our job is to see how we use the inventory methods to calculate the cost of goods sold. So in this case, right, by using LIFO, right, what I notice is I'm going to start from the bottom batch, right? So my most recent purchase that I bought was that 100 items, okay? I'm going to also get rid of the next one, which is 300. And then I'm going to keep going up until I have no longer any more inventory. But in this case, right, if you already kind of noticed this, you have a total of 1,700 right here available for your net purchases. You sold a total of 1,900. So already, if you already figured that far out, you're going to sell out your entire net purchases. Okay? So in this case, right, yes, that's also another way that if you could find the answer a lot more quicker, then go ahead and do so. But in this case, I have to teach to you exactly what it is that I have to teach you, right? In this case, the costing method. I am going to get rid of my 100 batch first. Then I'm going to get rid of my 300 batch. Then I'm going to get rid of my 800 batch. Okay? And then I'm going to also get rid of my 500 batch. Okay? So that will give you maybe my 1,700. And because I'm going to get rid of all of those values, right? And all of those, I'm getting rid of every single batch all at once. That means I already have the calculated amounts of what each batch is going to be, right? I know for a fact that if I'm going to get rid of my first batch of inventory, right? I'm going to get rid of all 100 items. I already know what the calculated cost is going to be. It's going to cost me in grand total that's $630. So again, that's what I have to teach you this is how we figure out how to calculate the cost of goods sold by using these methods. So again, since we already figured that much out, right, I'm just copying and pasting everything in here. So again, if your values matches, which is what it's supposed to be. So right now, I sold out all my net purchases at 1,700 at a grand total of that 10,550. But in this case, right, I need to sell 1,900. I've only sold 1,700 so far. So how many more items do I need to keep selling? Right? If you've done the math, right, you could figure it out by doing 1,900 minus 1,700. You'll know that you need 200 units left. Okay? Now in this case, I got rid of everything in my purchases. So that means I have to dip into my beginning inventory, because that's the only batch I have left. Okay? If that's the only batch I have left, how much is it? How much does it cost per item? Because I'm not going to get rid of all 600. I'm only getting rid of 200 of it. So in this case, my cost per item is $5.10. So that's what I have to do. This is where I need to actually calculate, because I'm not selling all the batch, right? I don't know what that amount is. So in this case, I need to calculate how much it's going to cost me to sell 200 units at $5.10, right? So in this case, you're going to get 1020, right? And if you have your running balances, right, your grand total cost of goods sold is going to give you the value of $11,570, right? And how do you solve for your ending balance? You choose, right? If you could take your goods available minus your total cost of goods sold to get you 2040. Or if you already figured out from the very beginning, right? If you're looking at your inventory and you know for a fact that you are going to be selling your inventory from bottom to top, and you know that your ending balance is 400 units, you're going to know that your oldest batch of inventory, which is your beginning balance, because that's what you had starting May 1st. You had the 600 units, right? You can just simply figure out this amount right here, calculating what 400 times that 510 is. And that's going to give you the same exact answer, okay? So again, this is LIFO for you, okay? Anyway, however you get to the same exact answer, whether you solve for the ending inventory first or use the costing method like I taught you, right? Go through it one at a time. You're using LIFO, you're going to go from the bottom batch, which is starting from the latest one that you purchased, and slowly making your way up to the top, okay? That's the rule here, all right? And this is what happens when you have beginning inventory, right? Beginning inventory is going to be treated as if it's your first batch of inventory that you have available on hand. Or in this case, right, you purchased it as of May 1st, right? Even though you carried it over from your previous inventory worksheet, right? You're going to treat this as if this is May 1st inventory balance. Then all of your purchases after that is going to go in chronological order how you purchased it, okay? And that is it. Any questions in regards to this inventory? How to use the costing method for this inventory worksheet? Okay. Right. Last thing we got to do is we got to complete question number 4, which is to complete the actual, I think it's May 31st we have here. We need to complete our conversion entry, right? In this case, how do I journalize my conversion entry? How do I record? My conversion entry from periodic inventory into inventory? Oops. Okay. In this case, right, you're going to treat it exactly like you had previously up here, right? You have your inventory, right? That's what we solved for, right? We solved for ending inventory. We solved for the cost of goods sold. We solved for our purchase expense and our freight expense, okay? Only difference is that now that we have these items here, right? Let's go ahead and just calculate all of this and we'll figure out what happens at the end, okay? So, okay, so in this case, right, what was the total value of your ending inventory? Okay, in this case, what was it? What did we solve it to be?
2040.
Yes, right. We solved it to be 2040, okay? Actually, hold on. I think I have to move this even more. Okay. Okay, just so then I don't mix up this transaction here. So in this case, we got 2040, right? What was the total value of my cost of goods sold?
No, 11,570.
Good. 11,570. Oh, wrong worksheet. Oh, no, that's right. 11,570, right? What was my total purchase expense?
It was 10,400 too.
Yes, good, right? And of course, we have, what was my total freight?
$150.
$150, okay? Now, let's test my accounting equation. Okay? I have a total of 13,610 on the left and I have 10,550 on the right. In this case, I am way off, right? My total debits does not match my total credits. So in this case, what is my total value that I'm missing? Well, 13,610 minus 10,550 gives me a total of 3,060. Where have I seen this number before?
It's the inventory that carried over.
Correct. It was your beginning inventory of the 600 units. So that is something that we also have to remember is we also included the beginning inventory, okay? So in this case, right, when you're referring to beginning inventory and ending inventory, do not write beginning or ending inventory, okay? For the sake of this class, you can do it because it's to help you practice. But in the end of the day, these two inventory, your beginning inventory and your ending inventory, are the same exact account. Okay? You're just taking the ending inventory and converting it into your beginning inventory, or your beginning inventory converting into your ending inventory, right? Because in this case, right, that's what happened. I had left over beginning inventory, which that means I just keep that in my inventory balance because I didn't end up taking all of my beginning inventory. So that's the idea here. You don't need to put you don't need to put in that this is ending, but for this class, right, for practice purposes, I'll allow you to do it, but they are essentially the same exact account. Okay? One of them is just referring to that you're taking it out from inventory and selling them, right? And the other one is just referring to what you have left remaining at the end of the day, right? So if you were to go ahead and zero out your purchase expense and your freight expense first, then whatever remaining you have left in your beginning inventory is going to transfer into your ending inventory. So in this case, that's exactly what we have to do, is that we have to recognize that we had beginning inventory, okay? And that's going to be something that you're going to use as a credit because you're essentially taking out and emptying out your beginning inventory as well, right? That's part of your total goods available, right? Good job, everybody. So that was chapter 5.5. Any questions in regards to the costing methods?